So you're going to have to be real careful not to chase up the market because you are getting over the EMAs over here, but you're not necessarily going to have much range. I think the gap on the S&P is like, yeah, we were at 1.34%. So, you know, overall, that's going to be just like, man, that's going to be real dicey in terms of just where we're at with that. So just be mindful, you know, not to chase the market today. These type of things happen. We've noticed that like when the market's gapping up, a lot of the range has been taken out. And statistically, these are the worst days to trade because you just don't have any edge to the long side unless you get a deep pullback and a shakeout at the open. If that happens, then I think, you know, we'll have a little bit of range. So the plan today is, of course, to make sure that we're hitting the 9 EMA pullbacks or 20 EMA pullbacks. So off the names off your watch list, because most of the names off your watch list are going to be doing what? They're going to be gapping up, right? So just be mindful of that. I think my favorite for today is this SFIX. SFIX has got really kind of a nice, easy, it's already been trending down about 10 bucks. Ideally, this thing pops at the open because the SSR is going to be on it. It's already down about 18%. Ideally, it pops at the open. Right, and so we can kind of work off a little bit of that extension, and then we'll look for either a quick pullback buy or a bust under the VWAP so that we can ORB that. So we'll have two different options, right? Let it pop at the open, you go quick pullback short, or you let it pop at the open, hang out for a second, base out at resistance, break back under the VWAP and short it, or you go ORB life. I think the ORB life on it's going to be probably the lowest probability one, but you never know. Usually with the SSR, it can be like 50-50 on what goes down on that, but make sure not to chase this thing low either, right? I mean, when you're already kind of used up a good chunk of the range, you'll have to be careful of that. Yeah, I think, you know, you could get this thing down to like $17, $18 today if we can get the right setup on it. And get that thing just shredded to the downside. Oh, yeah. Hold on here. Oh, yeah, there. Good. I added this camp to the watch list, too. It doesn't have that much pre-market action right now, but looks like they missed on earnings. Usually when you miss on earnings like that, and you're already in a downtrend. That can add a little bit of sell pressure. Do like this one also. We'll have this TVTY on watch list for day 2. Obviously, this was like about as clean of an ORB as you're going to get. Good job, Brad Young, on hitting this thing like a man yesterday. Frankly, I missed it. But we may have a day 2 on this thing. Because the SSR is on, you're going to have to need this thing really to get jammed back up into maybe 30, 31 before you can look to re-short it. But we'll keep an eyeball on that. You can see, look at all the green on the watch list. This is what I mean, right? You get all this green on the watch list, you can't chase this shit up, right? You can't chase it up because if you do, it's going to be real tricky. So we'll have a real short watch list today. Obviously, this Twilio's right at the breakout spot. Pre-market, it's already sitting there at the breakout spot, which is like, you know, 95, 97-ish. We got to let this thing pull back at the open. Look for a 9 EMA rider, right? So let it pop up, pull back to support, and then we'll dip and rip this thing. I will not chase this market. If you see me do it in the chat room, it's because I got FOMO and I'm on drugs and, you know, I've lost my mind. But that'll happen sometimes. Eric Harper, you're in charge of making sure that I don't chase it. Casey, you know what? I didn't have this on the list, but frankly, like if you can get this thing under kind of 112, it would work. But otherwise, you know, not my cup of tea. Maybe I wonder if, yeah, SPLK looks good too. You know, you got a flag pattern after that earnings breakout. It's a little bit mid thrust, but I'd give it a B minus. And I'm guessing you were a C student, so B minus is probably good for you, Eric. Burn! Now, RH. Watch this one. So you had that big earnings squeeze. Now you got a nice tight range over here. If you're looking at 30-minute chart, right, you can see here you got some easily definable levels here. You know, if it starts to cook out of that 142, so what happens is, right, if it breaks and then it's got to hold, right, it's got to build a pattern over that level. So when you think about levels on your daily chart or your 5-minute chart or your 30-minute chart, what you need is, right, break, hold, build. It's got to build over that, right? That once it builds, then you have, right, a solid foundation to add and play a run to the upside. Okta is looking pretty good too, right? A couple days ago, this was like the hottest sector. You can see even off the bottom, right? Like this is the one that's had the high relative strength. It's almost up a double even in the midst of teeth of the bear market. Some of these China stocks may go today too. They trade like shit. They really do because they're in such a downtrend. Out of the ones I found, this Momo is probably the most extended and the most oversold. 6 stochastics, right? It was just 34 bucks. So it's been down about $10. So you have some upside to this, maybe to the 9 EMA. If these China stocks hold, we don't know, right? I mean, every day it's just like, hey, we've got a China deal. It's fantastic. We're working together. Okay, no collusion. No collusion. Right? And that's all you kind of hear all day. We'll see if this thing kind of busts back to the high side. 50-50 on it. Mongo Bongo, keep that on the list too. And if you need a rubber band long, this FedEx has got probably, man, it's got about room to about 214 with the 9 EMA. So we should be pretty good on that one. Acor looks all right. Hey, Josh, what's up, baby? Good. Hey, Bajorn. Shit. Did I say that right? Yeah, this here moves slow because it lacks volume, but, you know, you do have a trend line break there. So it could work, you know, especially if the market goes. Just the liquidity, the volume stinks. You know, what I've noticed in this kind of bear market trading action that we've had recently, the low liquidity plays, you know, even the ones that do like 1 million shares a day in volume, they're not easy to get in and out of right now because there's been an absence of buyers in the market. There's been more sellers than buyers. And so even if you see 1 million shares, like sometimes they're still illiquid. So just be mindful of that. So I'm just going to kind of shorten down this list so you guys don't just sit around pissing in the wind and stuff. SFIX is the top gapper. Top stocks for today: Twilio, RH, Okta. We'll use ETS, inverse ETS, all that kind of fun stuff, and we'll get this party shredding. Josh, you could. I do have Acor on the list also. If it kind of I would only short this if it's under this kind of like zone over here. Otherwise, you know, you got to leave it alone. I think it is. So you're kind of in that sweet spot. Now, this one I don't believe on Acor. I don't believe this was an earnings gapper. It looks like it was on a downgrade. Downgrade gappers are they're a lot more 50-50 than earnings gappers, right? Sometimes they just pop down and they kind of bust back over. You know, you can see, right, you only got about 38,000 shares in pre-market volume versus, right, something like an SFIX is already doing its whole daily volume pre-market, right? So normally what it does, it's already done, right? So just a little bit difference in how they're set up, but I think it's worth watching too. I'm definitely going to keep it on my watch list, and you know, we'll see where we're at, buddy. Dun, 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 dun. And then yeah, look, the rest of this stuff like the Nvidias and kind of all that kind of stuff, you guys can definitely keep some of those on your watch list too. In the end, this is kind of how you got to think about this. If the market ramps and squeezes hard today, pretty much every damn stock is going to go up. The question is, can you chase it, right? So wait for those pullbacks. Don't chase it up. And then remember, there's typically been shakeups. We've had gap up days that have reversed. Don't forget Friday, right? We opened up strong. We reversed. We ended up down to like 600 points. Now, this is a big gap up day, so the odds of going red are smaller, much smaller, maybe even minuscule. But you should expect some pullbacks at some point in the day to load some positions, but definitely not a market where you chase. You chase, you die. You chase, you a sucker. You chase, you want to lose, right? Sometimes then, remember, if you chase it, it's because you want to lose, right? We're destructive people as humans. So we got to do what we got to do. As always, let's have a little fun. Let's go do what we got to do. For those of you guys that are brand new, of course, check out our YouTube channel. I just released a 7 Deadly Sins of Trading. It should be posted yesterday or the day before. Go on and watch it. If you've got some trading problems, that should help you out. Now, I've got to go in and get in my chat room. As you guys know, I trade live all day, well, till I get done trading. I trade live in front of everybody all day. We go and rip and ride, slip and slide. So let's go do what we do. And also, I believe we have a webinar starting 4 or 5 days. So that'll be fun too. All right? Peace in the Middle East, people.